Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday pre-market prep. Apologies for the delay. That was user error. That was my fault. But we're back with you this morning. It's deja vu all over again. Another Monday, another vaccine headline, another rally in reopening stocks, and another drop in stay-at-home stocks. So we're going to talk about that exact trade. We saw this last week. We saw the market kind of give back a lot of those gains throughout the week. And we'll talk about what today's headline means now, taking last week into account, how we could react to today's headline throughout the rest of the week. Our guest today is Jonathan Corpina. He's a senior managing partner at Meridian Equity Partners. He would join the show at 8:35. We got a couple of earnings on our radar, but the Moderna news is the news of the morning. We'll throw it to Joel. Joel, how are we reacting this morning to another positive COVID vaccine headline? Wait, throw yourself on mute. There we go.
Good morning, Spencer. This is just like last Monday here, not quite at the same level, but we are trading in the green by 39 handles at 36.21. Strong close on Friday, and we were even moving last night to the upside, so I had a little bit of a bias even before the news came out. You have crude loving this news as well. That's up $1.84 at 41.97. Gold's down 1060 at 1875.70. Silver's in the red as well by 33.5 cents at 24.44. And Bitcoin getting comfortable here in the 16,000 handle. That's up $125. It's 16,395. So sometimes you make bad calls, sometimes you make good calls, and then sometimes you make great calls. And this falls into the great call category for you, Triple D.
Yeah.
After being, so cautious on these reopening stocks, you just got a little bug in your ear last week, and Moderna is delivering for you.
Yeah, I mean, this is what we talk about. It's like looking at your opportunity here. We had the big rally last Monday on the Pfizer vaccine news, and all these reopening stocks ripped up 15, 20, 25%. That was just stupid. They ripped up way too much. We talked about that. But what happened over the course of the next 3 days? A lot of them gave the majority of those gains back. So it gave you an opportunity. And I not only said this once on the show, I said it twice. I said it Thursday and Friday. I said, if you want to get in these reopening plays, now is the time to strike, because, like a stock like American Airlines entirely filled the gap. A stock like Spirit Airlines entirely perfectly SAVE filled the gap. Perfectly. I not only, talked about it, then I tweeted it out just in case you weren't listening to the show. And I talked about all the stocks. I traded EA for Win. I bought Save. I bought American Airlines. I bought Carnival Cruise Lines. I bought Norwegian. I bought American Airlines. I bought Sabre, the thing behind the thing, because somebody on my Twitter account said, don't forget about the thing behind the thing. I was like, oh, that's a good one too. So today, I think is the day you ring the register. I mean, I bought Save 2 days ago, and I'm up 18% net. 18% in 2 days. I bought Norwegian 2 days ago. I bought it Thursday morning, and it's at 22.20. I don't know. I'm up like 19% already in it. So, these are incredible gains very quickly. Do you hold? I mean, I've always been better at entering. I'm good at looking at the entries. I'm not great at exiting. I always sell too soon. So maybe I'm selling too soon here this morning, but I've already sold my win. I sold my win out this morning, just sold it, just in the upper 98s. I've already sold my Save because, boom, I mean, it just went from 18 to 22 in 2 days. So, I mean, they gave you the gain. That's 18 to 22. What the hell is that? 4 points on 18. I mean, it's a 25% gain. I didn't get the absolute bottom. I think I bought at 1880, so I bought a little bit early. And then, like I said, in the afternoon, the Thursday. So I bought all these stocks Thursday morning. Thursday afternoon, the Chicago news comes out, rains on my parade. I was way up in some of these stocks, and then some of them I was actually down with. But then the trade reversed Friday, maybe anticipation ahead of the Moderna data, which we knew we were going to get. And now we get the positive Moderna data, and that's driving the trade here. And, the opposite coin of it was we were saying, on Thursday's show, is I would sell my Zoom. I would sell my Peloton. I would sell my Teladoc. All those stocks have been spanked now in the last couple of days, and obviously getting spanked here hard this morning. Zoom's down another $20. So, opportunities were there. They gave you the snapback, they gave you the rally in those stay-at-home plays, and they gave you the sell-off and the reopening plays, which you needed to enter. So, like I said, I am probably going to ring the register on most of these because 18 to 20% gains in 2 days. I don't just shrug that off. I usually book them. But it's there's opportunities here all the time. You just got to recognize the rotation, and when it gets over down the one side, you can also recognize that we had a catalyst. Like this was scheduled, correct, Spencer? We knew the Moderna data was coming.
We knew it was coming.
We didn't know what it was going to be, but we knew it was coming.
We knew it was probably coming this week. We didn't know it was coming Monday morning, and we didn't know what it was going to say. Now we assumed it was going to be good. They kind of hyped it up. I saw a couple reports from some reporters hyping it up, saying it was going to be as good, if not better, than Pfizer's trial. But again, we didn't know exactly when. We didn't know exactly what. But so that's why the timing of it is surprising, and also the number, the efficacy rate that they said, 94%. Pfizer said it was at least 90%, and Moderna was at. Is actually 94. What was it? 94.5% is what Moderna said. So their vaccine candidate is more effective than the Pfizer BioNTech one, and that's why Pfizer and BNTX are down this morning.
Yeah, and again, it's always like the vaccines are competing against each other to a certain extent, so it's not surprising. It's not surprising that Pfizer and some of the other vaccine plays are down here. Moderna had a nice run into it. Now it gets the spike into it. I think if you're in Moderna, I think this is as good as it gets. So I don't know where it is relative to where it was this morning. I would assume it's probably already coming down if I'm just, looking from those. Yeah, 106. I think it's as good as it gets. The stock is making new all-time highs here. So, that's, one thing. I never like shorting stocks making new all-time highs, but I feel like now is the time to ring the register on this trade. Why not? Why not? We made a good call. Whoever followed me Thursday and Friday, sometimes, like we say, we make good calls, bad calls. We're just trying to help and give you our ideas and give us a feel for the rotation. Hopefully a few people followed me in. They were tweeting at me saying they were. I know my buddy Mike out there, he followed me in here too. He's out in Nashville and he followed, and he's like, when do we sell? I was like, you know what? I'm going to say it today. I think you sell into the strength today. You got Moderna. If you bought ahead of the headlines, I think you take the profits. If you've bought all these reopening stocks Thursday and Friday when they filled the gap, I think you book the profits now. I might be wrong. I'm very, like I said, I'm not that great at exiting trades. I always sell too early. So, maybe I'm selling too early again, but it's hard to just shrug off these gains when they're that much overnight. Moderna is having, a 13% gain here overnight. Great data, but a lot of this maybe, was anticipated to a certain extent. So it's getting the pop. I think you book the gains.
I think the Moderna is a little bit easier than the other stocks that you're talking about. Just pull it out of the Pfizer playbook for that. Yeah. So I'll look at the pre-market high, and the pre-market high comes in at 106. You hit that in a couple different brackets. So I would wait. Or not necessarily wait, but it's got to get back over 106. It's got to, in order to keep going. And you've backed off $5 on that. So that one, I feel, a little bit more that the high could be in.
Yeah.
When I'm looking at these other stocks, and I guess it could be, I don't want to concerning, but okay, American Airlines popped to almost $14.50 last week. Now it's struggling at 13. So I think you got some company there on the sell side, Dennis, because stocks are not going back. In fact, I looked at almost all these, and they are not going back to the levels that they were last Monday. Same thing with NCLH. So if you want to hold out for those targets, I don't know.
I don't think you're going to quite get there.
I don't think so either.
I think it's the opportunity here again. Fade trade has been working. We've been pounding the table. I keep preaching it. In the last 3 months, the fade trade. What do we mean by the fade trade? That's selling the rips and the buying of the dips. Not just the buying of the dips, but the selling of the rips too. It has been working like a charm. I love this environment. I know you love this environment too, Joel. We're natural contrarians. So you see the big move? You sell it. And if you got guts, you sell it short. I don't have the guts to sell some of these stocks short here today, but I'm going to probably be booking my profits. My buddy Mike just messaged me. He says, yes, I'm selling my stocks that I bought yesterday or last couple days as well. The reopening plays. I mean, there was just a setup. You've got to strike when there's a setup. I mean, look at SAV, how nice that setup was. And I was early on it. Like I said,
Yes,
I bought
you
at
were.
1880 and it went all the way down. I was like, okay, it's filled enough of the gap that I felt comfortable. It filled the entire gap. A perfect textbook technical gap fill from a move. And we're not talking little gaps here. You know, this thing gapped
Big
from
one.
20
Big
to
one.
23 or 18 to 23 and then filled the whole thing in 4 days. And then you knew the Moderna data was coming. So it gave you that, opportunity as well. And now it goes up and I just sold it. I just sold it about 20 minutes ago at 21.90 in the pre-market. I'm out. I'm completely out on save. I'm completely out on win. I just sold that one too. I've still got the NCLH. I still got 3 or 4 of these things. I'm probably gonna sell them all.
If you have,
Because how do you not take the profit, Spencer, when they give you that much that fast?
so if you've been listening to our show for a while, if you've learned one thing, if you own all those stocks that Dennis just sold, and you've learned one thing from our show, it's that they'll probably keep going up.
I know, because I'm always sell early. I sell early all the time.
So, no, but in all seriousness, can we just take maybe a quick time out from the trading stuff and just give these guys a round of applause? I feel like we didn't really acknowledge that last week, but I want to. I mean, what these
Pfizer and Moderna,
what the people of these companies have pulled off, these scientists,
sure.
Nothing short
Oh,
of.
I thought you were talking about us.
Nothing short of a miracle when you think about it. I mean,
94 or 95% efficacy here, Spencer. Is that what the data shows?
Yeah.
90. Moderna said 94.5%. Pfizer said just over 90%.
Get us back to normal. I mean, okay, a round of applause, Pfizer, Moderna so far. Get us back to normal. That's what we want. We want to get back to normal. Are we out of the woods? No, but are we closer again today than we were? Absolutely. So get us out back to normal. That's what we want. Maybe you should hold a few of these stocks. Maybe we should just hold a few of these stocks, these reopening, because it can't be all tech. We can see what happens when you're all tech here this morning. NASDAQ actually trading in the red here. Amazon, which I have one of the biggest positions of my long-term portfolio, not selling it. But I mean, it's down $25. So, that barbell approach is working pretty well here this morning, or you just buy the S&P if you want to really, just simplify it all because it's got everything in there. So I don't know where we go from here, but I agree with you, Spencer. Let's give them a round of applause. We want to get back to normal.
I mean, they were talking about it on CNBC today, and sometimes it takes 1, 2, 3, 4 years to develop vaccines and things of this nature. So, yeah, I mean, the thing is that going in different directions, right? The cases are wrapping up, so the cases are good. There's it seems to be like a pendulum. Good news, bad news, good news, bad news. And we've had a couple weeks of really, really good news. And I look how the stocks are reacting to the way they did last week. And the only thing, the only reason I'd be in your camp of selling them is that they're not back at the levels that they were last week.
Well, maybe not yet. Maybe they take them out today.
Yeah.
They could take them out today.
Yep. And consolidate.
But it's a snapback rally, and now you have people like Spencer was saying that didn't get out Monday morning. It's like, oh, I'm getting a second chance here. So you have an overhead supply issue in a lot of these stocks too. As you get near those Monday highs, there's going to be sellers. So, do they take them out? Do we overpower them? Do we have more positive headlines coming? I mean, maybe that is the case, but
and the people that
if you had these on for a trade,
Monday.
I had these on for a trade. I put these reopening stocks on for a trade. I said specifically in my tweet, swing trade. I mean, 18% 2 days. How do you not buck it?
And what about the people that just went long on Monday? And they're
down still.
Yeah.
I mean, I think you cut your losses maybe. Maybe if it's getting close, like you can't. So again, they're obviously not listening to the pre-market prep show if they were buying Monday, because I said on Monday, if you're buying today, you're doing it absolutely backwards. And then you got the opportunity on Thursday. Got it. Timing is all. You could be right on the story. If you're off 4 days on your timing here, you're buried. Don't chase. That's the story. Don't chase. This is not the market to chase in. It gives you another chance. again and again and again and again. We have seen this story. I mean, think about you're chasing Amazon while it goes up 150 points. Oh, okay, now is the time to buy it, and then it comes right back down. I mean, look at this Amazon chart from the last 6 months, really. I mean, you can even go back to like in the beginning of the summer. I mean, we were up in June at 3,200, at the end of July, 3,200. So July, August, September, October, November, for 5 months, we were just chopping up. Get down to 2,900, it's a buy. It's up to 3,300, it's been a sell. I mean, there's a lot of money that's been made there. I've been long it the whole time in there, and obviously, I make some trades on it too. But obviously, it's been better just to be buying and selling and fading the moves and taking the gains. A lot of 100-point gains in there if you're just buying the chop and you're rebuying at 3,100 and selling at 3,300. Rebuy at 3,100, sell at 3,200. Rebuy at 3,100, sell at 3,300. I mean, timing, you're not going to get it perfect.
A lot of chop in there.
It's just showing you if you're chasing the moves, the odds are you're on the wrong side of the trade. If you're buying the day that Amazon's up 100 points, you're probably losing 2 days later. So if you're selling the day that Amazon's down 100 points, and it's not down 100 points today, it's only down 25. But if you're selling Monday on the day that they collapse the stock, it gave you a little bounce back. Is Amazon overvalued? I don't know. I mean, everybody's still doing everything, Amazon. It's not like what's the, price to sales on Amazon? It's something like 4 to 1. What's the price to sale on Zoom? Like 50 to 1. I mean, there's a big difference there. So maybe Zoom has a little better profit margins, which helps a bit. But again, is Zoom going to grow into that valuation? I don't think so. So Amazon is still going to be.
This is a really interesting chart. This is really interesting chart. And I'm looking down here at the monthly.
Yeah.
And you can see, and look at the price action that you had in the middle of 2018, right? You ran up, you hit 2000, and then you kind of just hung out. These are monthly candles here, right? So you hung out, $500 range pretty much, down to 1,500, a little bit under. Then you regained its momentum. You took out 2000, and then you had a really long consolidation period in 2019. So, and then the big ramp up here in 2020. I just wondered if you're going to hit, if this pattern holds true, you're going to go bump up, you're going to go back up to 3,500, and then you might have a quiet 6 months in 2021 before another ramp up higher. I mean, if it's going to follow this pattern, because that was a big move that it had in 18, it took a while to consolidate. I think longer term, you keep an eye on 3,000 here. If you're looking at it from the other perspective, you're holding up here. You've held up above 3,000 after hitting 3,500 for 4 or 5 months. If it loses 3,000, I think on a monthly candle, then you might get some a little bit of downside. But until you take out 3,000,
it might do that. I mean, we have a lot of people hiding in Amazon. It might do that. I'm hiding in it too, to a certain extent. I just believe that there's long term, and I think long term is going to 5,000. I think of the market. I think if you think the S&Ps, and the Nas, and obviously Nasdaq, obviously. But if you think you're going higher here in the next 5 years, I think Amazon leads the charge.
Yep.
So it's in every portfolio. Everybody owns it. I don't see why, it's not, people say it's so overvalued. It's not ridiculously overvalued, though. They just keep growing. They don't put the money to the bottom line because they're growing the top line. The top line's grown a lot. So I think I stick with it.
Yeah, and it's interesting, too. You look at, Apple down 40 cents, Microsoft down $1.76, Amazon down, Google down, Facebook down.
But they're not down like they were last Monday. So you're making a good point there, too. We got a little bit of a tech wreck this morning, but not bad. The move is not as pronounced as it was, and that makes, to your argument, ring the register, right? Wasn't that what you were kind of saying? Yeah. Like if you bought American Airlines Thursday, which I did, would you ring the register?
Yep.
I think I would too. I'm thinking about selling it like right now.
Okay.
Like third night, lots of liquidity here. So.
Oh yeah, it is. It's traded a ton.
I'm trying to remember here. I'm trying to remember back to last Monday. I think the NASDAQ futures were down like 2.5%, 3%, I think. After the Pfizer news, they're down 0.25% this morning. The Russell futures were limit up last week. They're up 2.25%. So it's almost like, we already got this news once before, so it's good news, but it's definitely nowhere near as pronounced as it was last week. And the other thing I'll add, and this is interesting, I didn't think about this. I'm reading now from the Bloomberg article, about this news. Obviously in these vaccine trials, the only way for them to know if the vaccine works is for people to get sick. That's how they know if it works. And so in some perverse way, the rising case count in this country actually helped these companies get their data sooner, right? Because it would have taken longer to get the results if cases weren't surging across the board in America. So that's sort of a weird byproduct of the fact that cases are going up.
There's lots of people to test on.
Yeah, it helped Pfizer and Moderna evaluate their vaccine quicker.
Yeah, and get obviously a lot of. How many people were in the Moderna one? Do we know? Do you have that data?
Yeah, I saw so many numbers this morning. I want to say it was 30,000, but don't quote me on that. They said more than 30,000 volunteers.
More than 30,000. Yeah. So I mean, again, that 95%. It sounds like they're onto something. So it's good news for the world.
It's a lot of people.
Good news for the world. I mean, we got a lot of bad COVID headlines coming, which is why I'm booking the games. I don't think we're out of the woods. I think, there's going to be lockdowns. We're a long ways. There's going to be a lot of people who are here dying still, but we got light at the end of the tunnel. So I could see it going either way. I think you're still selling rips and buying dips. I think we get some negative headlines next week or something happens. Maybe they get spooked on the lockdowns. Maybe Biden tweets out something saying, if we have to do a lockdown, we'll do a lockdown. And, Biden's going to be more attacking. And obviously Trump said absolutely not under this administration. No way for a lockdown. Well, there could be any of those headlines coming.
Biden said no lockdown.
Did Biden already say that? No lockdown?
Biden's people said there will be no federal lockdown.
No federal lockdown. But they can still do state to state what they want to do. I mean, there was rumors Michigan is going to go into lockdown. Joel, what anything transpire over there? It's still just rumors.
High
schools are shut down though, are they not? Michigan?
Yep.
Schools are shut down. Dining restaurants are shut down. Gyms are only open for individual workouts, not for groups. So we're slowly going back into lockdown. And then, this is happening not just Michigan, across the country.
The headlines are going to be good. The headlines are going to be bad. And that's why the fade trade is still going to continue to work.
And something to think about too, and Moderna themselves said this morning, is this vaccine won't be available until the spring. So we have to get through a flu season first.
And, we also have some potential good news on the vaccine front because of Russia.
Oh, right.
The Russian
the Sputnik?
Yeah.
Yes.
Sputnik 5?
There is actually another.
And it was 97%. It had a 97% efficacy rate, I heard.
There is actually another headline this morning. It's taken a back seat to the Moderna news, but Inovio initiated the phase 2 of their phase 2/3 clinical trial for their own vaccine. So Inovio is getting there. Moderna and Pfizer seem to be further along. But the Inovio news is taking a back seat, but Inovio is up big on that headline this morning. So, we're getting more headlines. We're getting closer. But we're not there yet. The fact that we still don't really know when a vaccine will be available and also how it'll be distributed is a big question. The fact that those two questions still exist is, I think, a big reason why we spent the second half of last week undoing the gains from Monday.
What do you think? Where do you think we are 1 year from now when we do pre-market prep, the show, November 16th, 2021? Are we still talking COVID? Or are we completely past it? What do you think 1 year from now? Is it the talk of the town?
No.
So in that case, I better be holding some of these reopening stocks.
Yeah, Dennis, I thought you did this.
I better hold a couple.
I thought you did this in your long-term portfolio for something.
No, I stuck it in the swing trading. I had it. Yeah. I don't mind a swing trade becoming a long-term investment if it's working your way. What you don't want to do is let the swing trade starts going against you. It's like, now it's a long-term investment because I have to wait to get my money back. So you can do it either way. So I kind of designate it. I have my day trading account, and that's my bright trading account. I do everything overnight there. And I'm out. I get flat on that account after every morning, because I usually at 10 a.m. that's when I take my time off, because I don't trade between 10 and 2 because it's chop hour. I like headlines. I like trading information. The news. I trade with the Benzinga Pro. I like trading. As you got lots of action, different coming. I don't like the chop from 10 to 2. I like trading inefficiencies. There's not a lot of inefficiencies between 10 and 2. So that's why I don't focus on that area. So typically for my day trading account, I have lots of, I start trading at 3:30. I take stocks overnight in the day trading account. Maybe a stock that's going to report the next day, or the next night or something, or in the next couple days. We've talked about all these strategies. And then what I typically do is I get out of them the next morning, and then I get flat. And then I start initiating trades 3:30 the next day, or that day. So my hours of trading are from 3 to 8. and then from like 6 in the morning to like 10. So it's still a long trading day, longer than everybody else at 6.5 hours, but I'm not trading the middle of it because I just don't feel like there's that much alpha to extract.
The bots are in there.
It's tough.
Very
the
good.
bots have dominated. I mean, if you're just, trend following, you're doing all technicals, you can trade any time of the day. It's different style. I'm trading inefficiencies though, where I'm looking for inefficiencies. And the high frequency traders have whipped that. So that's why I don't focus those middle 3 hours. There's too much chop in there. It's too much, a noise, you'll say, like the high frequency trading noise. So I've adjusted, to my hours. So that's my day trading account. And then I've got my longer term stuff where I put my swing trades in, but I designate them ahead. Okay, that's going in there as a swing trade. Because if I had it in my day trading account, I wouldn't be able to hold it for 3 days because I'd be looking at it the whole time. So I don't want to look at it. I don't want it in front of my nose and so easy. I have to go actually log in. So it's a little bit of work, which slows me down from an impulse decision. But, when I designate them going in, and I even tweeted out that these were swing trades, I mean, it's hard not to take a 15 or 20% gain in 2 days.
Targets. We talk a lot about targets and discipline and things of that nature. So all working together for you. So
I mean, the save wasn't, look at save. So I just sold it. I mean, it sold off, filled the entire gap. Now it gets up and it's getting towards the top. Like I just sold at 21.90. So I mean, you're a buck off 22.98. Do you want to hold out for the last buck? There's going to be some people trying to sell though in the 22s that are underwater. So I don't know if I want to hold out for the next buck. And sometimes you get this overshoot in the pre-market. I mean, it's a pretty big move for Save, up 11% here today. It's great news for them, but is it as good, as it was last Monday? Like Spencer was saying, now we're starting to get, expectations. Okay, these vaccines might actually work. So some of that's getting priced in. So from a technical basis, it looks like, I'm getting near that high and it's time to book profits.
All right, let's move on here. It's 8:30. We spent a half hour on essentially 2 stocks. No, a little more than that, but
the whole reopening trade. No,
Yeah.
we talked the stay-at-home stocks.
No,
I
you're
mean,
right.
we've got to talk about those. I do believe that Zoom. I said it when the stock was 430 last week. I think the path of least resistance for Zoom is much, much lower. It's down 21 points. Am I selling if I had it here? I'd wait for the snapback, but you had the rally. You had the rally on Thursday and Friday to sell. So now I don't know. I mean, if it takes out the lows, you got all kinds of problems there. But if you like that answer to that question. So let's go back to that original question because a lot of people own Zoom. November 16th, 2021. Are we talking about COVID? We all kind of said no. So where's Zoom then? So where's Zoom then? The story stock of COVID. The stock, there is arguably no stock that has benefited more from COVID than Zoom. If we're not talking about COVID, where do you think Zoom is? I don't think it's a story stock anymore, and it's got a nosebleed valuation. I think it's under $300. I think it might even be under $200 a year from now. It's possible. I don't know if it's probable, but I think lower. I think if the case, I mean, if we're still talking about COVID or some other, diseases, and we hope that doesn't happen, but if we're still talking COVID a year from now, Zoom is probably higher than here. But I don't believe we're going to be talking about COVID on this show. It might still be around, but we're not going to be talking about it like, we're going on a lockdown or are we going to lockdown? So I think you got to start positioning for that now. And the time to get the hell out on Zoom is, well, it was last week, but I don't think you can own it.
It's 350. I see this 345.68 low. I mean, that is the key. That to me is really gonna turn. It looks like 350 on the chart, but it's actually 345.68. So you've held that. You had probably the last earnings report. You had the bump, you had the pullback, and then the major run from 350 to 600, and now you're coming back down to this area. This is where the floodgates could open. What do they report next? Do you know? Because the next report could be pretty good. But to me, it's not. You can't do a head and shoulders on a monthly with only 3 candles here. But
I'll tell you,
there it is.
When they report 2 weeks from today, after the close.
Really? Oh boy!
If they rip that would be a great selling opportunity. If they rip it on that, I don't know if they will.
I think they're going to trash it no matter what. I think in this kind of environment.
You're 2 weeks away. You don't want to be short 4 or 5 days before that report because there'll be anticipation and there'll be a run up probably ahead of it. So, but
this report could be
needs
good.
to hold 366. If it holds 366, you still are, okay if you're long it. If it loses 366 and then loses the 350, then it's Katie bar the door because it's nothing till 300. So I think you're sell rallies. I'm not selling dips on Zoom today. I'm not selling it when it's down 5%, just like I said on Monday. I'm not selling this thing when it's falling 100 points today. I'm going to wait for the bounce back. And you got the bounce back. You got a nice bounce back from 366 up to 435. It gave you an out. Now it's down $50 from there. So I think now you get back to 400. People are looking to get the hell out. There's going to be people looking to get out. And Peloton, if we are not talking about COVID 1 year from now, people will be starting to go back to the gym. They're not going to be staying on this day. They're going to want to get out. People are going to they're not going to just want to sit at home. There's no COVID out there. I'm going to be wanting to get out. There's going to be a lot less Peloton orders if we're not talking about COVID a year from now. So again, same story here. I know I took a lot of heats pointing out that the CEO sold 100,000 shares, and everybody pointed out, yeah, he's got like 10 million shares though. So you're pointing that out. But I mean, it's been straight down. It was 110 when he did that sales, 96. But again, these headlines are driven by obviously the vaccine news, and this is a COVID play, stay at home play. I think you got to sell rallies in Peloton. I think you got to sell rallies in Zoom. I said this last week.
Teledocs too falls. Yeah, Teledoc. I mean, and also looking at this Zoom chart. I mean, you're looking at it and you're like, wow, that all-time high is 200 points away. I mean, 200. Look, it took all this time to go, and then look how quick they gave it back. There's a lot of red bars in there. I don't know if you're ever going to get back to fill that gap. 588.84. Another thing you have to think
I said about, it last week, Joel, too. I think you just said the same thing. I don't know if you're ever getting that back. I think the all-time high forever in Zoom is in 588. I said it last week. I'm going to say it again. I do not believe the stock will ever see 588 again. You can never say never, but this is my opinion. I believe 20 years from now, Zoom will still be around. I still don't know if it's going to be $588.
It could if they do a reverse split. Don't say it's not.
Yeah, they do a reverse. But I'm saying I think the all-time high forever is in Zoom. That is my opinion. The only way that doesn't work, I believe, is if COVID just sticks around. The vaccines fail miserably. We all get spooked. Some other deadly virus comes around and starts killing everyone. Of a zombie apocalypse, maybe Zoom is higher than
COVID.
Also with Zoom,
I think the story's over here.
You got to think about a couple dynamics too. There's a lot of people sitting on a lot of profits on this thing.
Everyone
right? Under 300, and then there's a lot of people that are sitting on a lot of losses, right? From anybody that bought this thing since mid-September. There's now
looking to get their money back.
Yeah, look at their money back. So there's different market dynamics in there when and if this thing rallies. You still got people like, oh wow, I bought this at the beginning of the year under $100. I know I missed a high. I'll sell it at 320. Something along those lines. S&Ps are hanging up here. We've had a quiet range here. We got a little bit of a fade going. I don't know if it's going to be quite like the fade that we have last Monday. We're 21 handles off the pre-market high, and we didn't quite we had an intraday high last Monday at 45.25. So I had that on my sheet, the 5-day intraday high. So be interesting to see if it's going to be the same trading action that we have. Is Mr. Corpina around?
Yeah, let's bring him on right now. Jonathan Corpina is a senior managing partner at Meridian Equity Partners, joining us now on Pre-Market Prep. Jonathan, what is your reaction to the way the market has reacted to another vaccine headline?
Good morning, gentlemen. Thanks for having me on. Clearly these headlines that we see, we knew we were going to get them at some time, right? So the market reaction is what it should be doing. It's just a question of how does this all play out, right? You get this immediate pop in the market, but when does the vaccination really come into play into mainstream? Is it at the end of 2020? Is it first quarter 21, second quarter 21? Frontline workers get it first, then elderly. So I think conceptually, the headlines are very good. They're very positive. And we knew at some point these headlines were going to come. But in reality, when does it hit the Main Street American? When can we have access to that? And I think that's a lot further down the road than we think or want it to be. So these market reactions that we're seeing, yes, the market should react this way. But in the longer term, we still have this negative headlines sitting on top of us as we see states of Washington and other states that are now clamping down on gatherings and setting curfews. We see it here in New York, Connecticut, New Jersey. So one headline is good, but I think that headline is going to really benefit us 6 months down the road. To get 6 months down the road, it's going to be very choppy.
I think I agree with you, Jonathan. Like the fade, I was saying the fade trade has been working for the last couple of months, and I think it continues to work because headlines will be good, headlines are going to be bad. Are we going into lockdown? Oh, but there's positive vaccine news. I just foresee a lot of chop. I mean, we talked about this, I think, even last time you were on a while ago. I mean, I don't see why the chop ends.
The chop's not going to end, and there's no reason for the chop to end. We got through the election, and whether you agree with the results or not, it was a date on the calendar that we all were looking for and knew if we just get past this date, the market will kind of calm down and have a better understanding of what the landscape is going to look like moving forward. We got to get through the next runoff of the Senate and see how that all plans out. But I think the market is very accepting of what's going on and what's happening down in Washington. But we're going to continue to see this chop back and forth. If you go back to what were the major headlines prior to COVID? January, February, we were talking about U.S.-China relations, tariffs, trade wars. We were talking about North Korea. These things are still there, right? They're just not the top headlines at these points. So these things are going to continue to poke their heads up as the COVID headlines start to quiet down, as we get past President Trump and President-elect Biden figuring out who's going to be in office in the middle of January. We can let them settle that one out amongst themselves. But from that point of view, the chop still is going to be there in this market. And that's my kind of concern, is that we're seeing these pops in the market, and then that's that fade trade. You come right in at that point and you start to see the market start to evaporate in a very short period of time. We're going to see a lot of this kind of activity, right? We're going to get through this week. A lot of economic data, a lot of earnings. Next week's a holiday week. We end the month with a big MSCI rebalance on Monday the 30th. And then that's going to get us into the beginning of December, where things historically quiet down, right? We'll see less banking deals, less syndicate, less IPOs. All that'll get quiet towards you get to the end of the year. And the beginning of the year will be quiet too, but yet we're going to have these headlines that are going to continue to chop this market around. I like the progression we're seeing. It's more like 2 steps forward, 1 step back, but we're going to have to get used to that.
So, Jonathan, as a trader, though, how do you know, like, how do you read the tape and know when the move is reversing, like today, for example?
Right. So you look back on patterns, right? And you look at, you try to look at patterns and you try to look at historically how the market's traded and trends. But we're in this crazy COVID environment that it's kind of hard to drive parallels to, and then you pull in what's going on in Washington. I think what we've seen is that when the market moves in the direction it's moving in now, if you start to see this fade halfway through the day, and as it starts to get towards the end of the day, and we've seen the market up 800 points, and it closes up 400 points. And if you look at the headline the next day and you never looked at the market at all, oh wow, the market was up 400. Well, actually it was up 800, and we gave back half of that as we had a very soft close. So watch the close, watch the last hour and a half of the day, because you'll see that if we start to fade there, then that's going to be a quick exit strategy for many people. And then you get that follow through to the next day.
And we're on the line with Jonathan Corpina, not on the floor of the New York Stock Exchange,
Correct.
Meridian Capital Partners. And I was talking about this last week a little bit, and you deal with, institutions and everything. And I looked at that pop last Monday, and I just was thinking, and we had the hard sell off, that maybe some of the big boys were like, this has just been one hell of a year, right? I mean, riding the market down, snapback rally, getting close to the end of the year. The election's becoming a little bit closer to being resolved and everything. I just was thinking, man, if you had that 17% bonus or something coming, locking in some gains, and that's kind of the way the market's reacting today a little bit. Is there any validity? I mean, I know these guys take a much longer term approach, but if you're managing big funds, this has been one hell of a year.
It certainly has been, right? I mean, you were choking in the middle of March, coming off of the performance that we've seen the last 2 years, and thinking what 2020 was going to be like, and knowing and planning for what those roadblocks were going to be, and be able to navigate that. And then quickly into quickly into the first quarter, you're down 30%. But quickly you've gained that back kind of without doing anything. So I think what we've seen is, and talking to customers, a lot of customers and larger institutions, there was never this panic mode. There was never this fear mode. And I think everything happened so quickly that there wasn't really enough time to hit that sell button as fast as possible and wipe out half of your positions, take as much risk off the table as you can, and then evaluate from there. Yes, as markets hit certain trend lines on the way down, they're somewhat mandated to take some positions off and manage risk in a certain way where they take some of their positions to less risk. But I think what we did see was not as much panic as we thought we were going to see. I think a lot of the retail investors, we talked about Robinhood, all of that flow there definitely added some momentums to our markets. And then you've got the market as it kind of, that V-shaped recovery comes back up. You kind of ride that wave as it continues. So I think institutional wise, they've done a pretty good job of managing risk and not getting too emotional into this massive swings that we've seen in the market. But you get to the point now where you opened up your statement, and mom and pop investor, you opened up your statement December 31st of 2019, and you saw your balance there. And if you open up your statement now, you're up 7%. And if you didn't know what happened over the last 11 months, you're like, okay, great, I get my 7% here. So it's you got to kind of keep things into perspective and keep reality of what's there. But I think as we get towards the end of this year, I think we're going to start seeing, end of this year, meaning in the next 2 weeks, some of these portfolios just locking in their years, trying to make sure that any other volatility in this market isn't going to impact any gains that they so far have locked in, considering that they were down 27 to 30% in March. This would be a win situation.
Jonathan, we're getting some feedback from our chat. Very nice bookshelf behind you, by the way.
Thank you.
Yeah. I'm just curious what the reaction was from your clients last Monday, and what you think that could tell you about the calls you may be having in an hour or two.
Yeah. So once again, these headlines that we're seeing, we knew we were going to get these headlines. These are not surprising headlines. It's just a question. It's two things. One is, when were they going to come, and what's going to be the reaction from it? So I think what we saw, the conversations that I had last week and the conversations that I'll have today is, do we think this is real? Do we think this really, is this headline strong enough to continue to prop this market up? Or is this just that swoop up and then we're going to start to fade off? Got to be interesting how this day plays out, because we saw what happened in the beginning of the week last week. We kind of have a feeling that today's market will probably get softer as the day ends, but still have a pretty significant gain overall. It's just a question now of Tuesday, Wednesday, Thursday. What's the follow through? What's the next headline that's going to help or not help this market? How does DC come in and play into this? We saw President Trump and New York State Governor Cuomo exchanging jabs back and forth, politicizing the vaccination. New York's not going to get it if they have to meet certain requirements to get it. This type of rhetoric back and forth is not going to be helpful for the overall psyche of our markets.
All right, Jonathan Corpina, as I mentioned, is a senior managing partner at Meridian Equity Partners, joins us periodically on the show. Jonathan, thanks a lot for the time today.
Gentlemen, have a great day. Have a great week.
All right, stay safe out there.
Thank you. Be well.
All right, we should probably go to this EV trade here. Chat's buzzing about NIO. Yeah. NIO reports earnings tomorrow after the close, down another, 4% this morning? 4 to 5% this morning in the pre-market. Oh man, I'm not sure about this one. This is tough.
Not tough at all. Andrew left bubble burster here. Its story's over. So or at least cooled off significantly. So now you have to wait for it to stabilize. People who just come in here and just buying around, this could go to 30. It could go anywhere. So now it's in just, you just stay away from it at this point in time. It could get a snapback rally here. Reports tomorrow night. Spencer, tomorrow night?
Yeah, tomorrow night.
If it rallies on good numbers, gets back up to like 50, it's a rally to be sold. I do not believe this is going to just start ripping the all-time highs, because now you've spooked the longs. It's been so easy. I was in this for a long time. It was one of the easiest trades if you actually bought it, because it just kept going higher and really never gave you a significant pullback. Now it does. So Andrew Left comes in, says stock's way overvalued, puts a $25 price target on Friday. Stock held up for a little bit there, and I was like scratching my head because I was surprised it didn't sell off immediately, but then, it started to go, and then they, obviously, and then it's just started to collapse. So 54 down to 44 in the course of the next hour, which is a 20% fall. Got a little snapback rally and then sold off again. Snapback rally, selling off again here this morning. I mean, now rallies to be sold in this. I think you could see a pop on the earnings, like maybe. The earnings are always a coin flip, but if it does, that would be a selling opportunity. So if I was a Neo, I would be looking for rallies to sell now.
If you're wondering where Joel went, this is the first. I mistakenly booted him out of our webinar.
Oh, so he's probably not trying to figure out how to get back in.
He's trying to get back in right now, but I was kicking out Jonathan and I kicked out Joel by mistake. And so Joel is trying to get back in with us here, but that's where he went. He's still there, but I kicked him out.
So there's a crazy EV trade, not only in Neo, but we talked about that. We've talked about all of these stocks. I mean, XPE, or what was the other one?
Yeah, XPEV. You've
XPEV, that one, the burst on that one too. So rallies to be sold there too, I think.
KNDI and then LI.
KNDI never had the kind of rally. So in LI, that bubble burst there too. So you look, Fisker is still holding up. Ooh, FSR, that 18. I tweeted it on Friday. I was like, hit 18, stall this out. It's back up there again, giving you a second chance. I think you sell your Fisker. I sold my Fisker too early. I think you book the profits here. Just my thoughts. This is my opinion. I don't know anything, but you got double top potentially there. I think you're ringing the register in Fisker. Solo has had a hell of a run here. It's been a great stock. I was in it once and then I got chopped around and I did not participate in the last 3 days. It was all just a gift. I mean, it went from $3 to, doubled in 2 days. So I think now you look at 791. If it, comes back in, I think that high is probably the high. So now I'd probably be a rally. Even this morning's rally, I know it's up 4%. I'd probably be a seller of that. I was nibbling on some more of these lithium plays though. Like I'm long LTHM, Jason Rasnick pick. Chart's looking good. I said on Friday it's looking good. I nibbled into LAC, which is another lithium play. Why did I do this? Because it's been in consolidation station for the last few days, and I think people start scrambling around saying, okay, well the EV trade is over, but or the EV trade, I'm looking for another area, and obviously lithium is still a direct beneficiary from the move to EV. So I picked up some LAC, Lithium Americas, just because I saw, a setup here. I picked it up just above $10. It's up at 11, so I'm already up pretty good in that. But I'm just looking at that consolidation after we had the big move back in October. It's come all the way back. It's consolidated and stopped going down now. So I feel like, now I have defined risk where, you cut through $9, you get the hell out. But you see if you got a move, maybe you got another move in here yet. Maybe the story can get hot here again. So I did nibble into that one, but that's the way this is. It's like not chasing, waiting for your chance. Sometimes they come in and then they start consolidating and start to round, and maybe they're going to give you another pop. That's when you strike. If you're striking the day after, the little mini crash here in Neo when it goes from 54 down to 41, so people lost some money. Now you got some pain there, so it has work to do. Can Neo story get hot again eventually? Yes, but I think, we'll see what happens with the earnings. But what I like is, when maybe it comes down to the mid 30s at some point in time, stops going down, starts to round a little bit, starts to look a little perky. That's when you strike. It's hard to strike the day after, a spanking on that, which obviously came from Citron.
Yeah, and
is Joel not coming back? He's mad at you now.
Well, Zoom has a weird feature where if you kick someone off, it's difficult to get back on. So he's trying to go in via a different browser or something. But
can we just invite him through something else?
Yeah, I'm working on it in the background. But the Neo thing was interesting because what Lef was saying, maybe unless I read it wrong, he was just saying, we were right, take some profits, and he said it was going to 25, right? I don't think he wasn't saying as he usually does with when he's bearish. He wasn't alleging fraud or anything. He was just saying, hey, it's come too far too fast.
Yeah.
That's a perfectly normal thing to say.
It has. I mean, it really has come too far too fast. I mean, this was a significant move. So, it was, I was long the stock for a while. And the reason I sold, and I sold early, I always sell early. I didn't even think I was selling early. I sold part of it 38 and I sold the rest of it, I think, at 42. And it went to 53 after that. I just thought like eventually this is going, to have an ugly day. I was 2 days, obviously it got up to over 50, but I thought that ugly red candle, I thought when I put that little mini double top in a 45, 20, 45, 29, that's what spooked me. And I sold out of my long then. It felt overdone. So it was time to book profits.
Yeah. All right, 8:53 here. Working on getting Joel back in. It's taking a little longer than expected because Zoom, again, doesn't let you back into the webinar that easily once you kick someone out. Let's do some questions from our chat.
Somebody asked about Shopify, Spencer.
Okay.
You want to go there?
Yeah.
I saw multiple Shopify.
Okay, let's go.
And they want to know, this is an interesting, because this story, I love the Shopify story. I love the Shopify story. It just got the COVID run, which was crazy. I would be a buyer of Shopify at some point in time. Valuation's still crazy, but this is a company that's for real. I believe, and not just saying because it's Canadian, I'm Canadian. This is, I believe, going to be, a company that eventually tries to take on Amazon even. Like this is, if they're not already trying to do that, obviously through the small business, they've got a lot. This is just a very unique company that is firing all cylinders and doing it all well. It's a company that I want to own. It just has got way overdone because it's obviously had the COVID bump from 300 to 1,000. If this was to pull into like the 600-700 area where I sold it too soon, I would rebuy my shares. So I want to be back in Shopify. This is going to sell off. It's selling off with the positive vaccine. It could cool off, but unlike a Zoom like that, I think all the good news is in. I do not believe the all-time high for Shopify is in. I think we'll see Shopify one day as a $2,000 stock.
Now, is that just fundamentally because they're different businesses and
Shopify, and the potential. I mean, think about Zoom. It's like really kind of like a one-trick pony, really. I mean, they got some other stuff maybe they're going to cook up, and maybe that would change my mind if Zoom can come up with some other businesses, and go from there. But it's just webinars. Think about what Shopify does. I mean, they do everything there is for small businesses trying to get online. Like they are the one-stop shop for if you're a small business and you're trying to get an online presence. They're a one-stop shop for that. I mean, this has changed consumer trends, COVID. So even though we might not be talking about COVID a year from now, I'm pretty confident we're still going to be talking about online shopping. And every small business that wants to get and figure it out how to get, online, Shopify is the one-stop shop for it. So I love the story here. I think if you're buying it here today and you're putting in your portfolio for 10 years, even though the valuation is nosebleed, I think you make money. Whereas Zoom, I think the opposite. I think if you're buying Zoom for the next 10 years, I think you lose money. So that's the difference. They're both COVID plays. They're both getting hit, but I like the Shopify story because I think there's longevity here.
All right, we got Joel back. Joel, I apologize that I kicked you out of there by mistake.
That's okay.
All right.
What did I miss?
You missed Shopify and you missed Zoom, and I think that was it.
Okay.
I've been saying this for a couple of days, and I swear I'm not lying, but I really do think that the 13F deadline is like today. I thought it was Friday. I thought it may be Friday over the weekend. I don't know exactly when. It looks like today is the deadline, so we're going to get some more 13Fs. Really, the Berkshire one is the one I watched before. I haven't seen it yet. I've checked
this morning
several times. No, I have not seen it yet.
It's supposed to come this morning, or
today.
Do they have till tonight?
Today, yeah. So they have
after the bell, they're probably going to come.
Do you think it's it's gonna, obviously Warren and stuff, but like with everything's going on, do you think it's gonna have the same kind of impact that, there's so many other things going on, like with in normal land,
right.
Those 13Fs make a big deal. And I don't know who said something about Warren selling his Apple or whatever.
It was just some guy on CNBC said that.
Yeah, I don't know.
But again, Warren can move stocks, so I'm watching.
He can. But once again, when you hear these moves, they're done. They're already done.
Right.
So,
okay.
They're 45 days ago. They're so done. They could have rebought them by that time. It's it's my pet peeve too, Joel, and you say it all the time. You're getting this information. It's so old, but I'll say it again. I used to trade all the 13Fs. The only one that really moves the stock significantly, Pershing Square, Ken Ackman. I'd say Ackman's number 2, but it's Buffett. If Buffett's got a new position, the stock will, if it's a smaller stock, it can rip up 5, 6, 10% even sometimes on that, if it's a smaller stock. So you always got to watch. What you want to watch is the new positions. So he got a new long. If he sold some stocks, those can go down a little bit. If he's bought some more of a stock, that can go up a little bit. But he's got a brand new long. then that stock can often really move. So keep an eye. That's what you want to look for, is the Buffett new positions. Ackman moves stocks too.
All right, real fast. There's a couple earnings I just wanted to cover real fast. JD.com had earnings this morning. Their earnings per ADS beat the estimates. The revenue was in line, and Casper Sleep CSPR was brutal. They missed on both the top and bottom line here, and their sales were bad. Their sales guidance was bad. So JD was good, Casper bad.
JD, direct beneficiary from COVID. I mean, this stock was in the gutter before COVID started. If you go back to, beginning of 2020 to $30. Now it's 90. I think all the good news is priced into JD at this point in time. I think if you're on JD, you ring the register, you did a good job. It was an unbelievable move here for the last 6-7 months. And I think it's time for the trade to cool off.
Looking at this, that's
a 98 this morning. People are nuts.
Yeah. Whew.
They're trading that probably before the print. Oh yeah, no. A lot of
profits under 85. I mean, 85. That's just a weird looking chart there. It had the matching range days, and then the rally up to you got a triple top in there too. I guess if you're looking to, if you're looking for more on this today, you got 3 highs right at the 92 to 93 area. Longer it takes to get up to that area, take it out, keep on going. A little bit of a fade on this one, but below 85 looks like things open up at JD. And what was the other one? Casper?
Yeah, CSPR. This one's been a brutal story since the IPO. This is one of those that just, I don't know. I mean, I guess it's off the low from this morning, but just a brutal stock. If you bought the IPO,
oh yeah, you're underwater on this one. Boy, oh boy, 3 monthly lows in the same area. So that's what you got to be. That's your focus here. And I wouldn't give up on this, but you could be looking at 620 was a monthly low, 622, 628, also 611 back in May. So major support in this one, but it's still almost 80 cents away from it.
And then Tyson Foods was out this morning as well. Their
chicken. How's chicken doing?
Their sales was good.
We love chicken.
Yeah, Tyson. People are eating chicken, I guess. So
I like chicken.
Of course, with chicken, everyone likes chicken. All right,
65. What's going on? What's going on at 65 there?
66 overhead supply here.
Okay, yeah, at 65 is where the pre-market high is, and then I see a daily high right there too at 65. So we'll see what happens in Tyson Foods. And then what's the other chicken one that they did the price fixing with?
PPC, right?
Yeah, PPC.
Yeah. All right, I don't know what that's doing. I don't think that moves really. All right. Yeah, unless you have a level to add, I don't think there is anything.
Nah, no, nothing to say. No.
Want to add real quick, we've got a lot of additional programming happening these days on our YouTube channel, and one of them is our new SPAC show that Mitch co-hosts. That'll be at 11 a.m. We've got a new guest. We got Julian Komoko, and he is the founder and CEO of Accelerate Funds, and he is a SPAC arbitrage trader. And
that sounds cool.
Outline his strategy and how he does that. That'll be at 11 a.m. Eastern time on our YouTube channel. And that'll be it for us for right now. So thanks to our guest today, Jonathan Corpina. Thanks to all of you in our chats. You can always email us, premarket@benzinga.com. Smash that like button. We appreciate any and all likes and the super chats as always. And as I always say every day, please remember that all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Everyone have a good rest of your day. Stay safe. We'll be back with you later in the day.